The other story that we're watching very closely, Greek politicians begin electing a new president this Wednesday, just hours from now. It's usually a ceremonial process, but the stakes are very high for this one. In these elections, it's the members of parliament who choose a president. But polls suggest that the governing party is short of a majority to select its candidate. If there's no majority, after 3 rounds of voting, there will be a general election. And that's where there are growing fears that possibly that could trigger a fresh debt disaster in Europe, and it will be deja vu all over again. We want to learn more about how this is going to impact us and the rest of the world. Owen Fairclough is here with me to share all that knowledge with us.
Phil, it is a little bit like deja vu, and the problem with this election, as you say, it's not really about who becomes president in Greece. It's about that bailout. Remember those hundreds of billions of dollars that those leaders in Europe spent days and months wrangling over a few years ago. That's more or less brought Greece back on track. The problem is now the main opposition party in Greece that some say could take power wants to tear up that bailout and stop paying back all of that money. That's starting to rattle investors and lenders a little bit. They're worried they won't get their money back. And in the last few days and weeks, it's sending borrowing costs in Greece shooting right back up to the kind of levels where economists start to set
the country down and the world down about them, whether they exit the euro or exit Europe or some disaster happening. But now, as we look at the 2 bailouts, what's different about this time?
One thing we haven't got this time yet, Phil, is European leaders pulling all-night meetings trying to sort out for the moment. One thing that Greece has been able to do in the last few months or so is begin to raise credit on its own terms. That's important because it says to investors who believe in Greece that maybe it's good for the money. And one thing we know that's fairly important that we didn't know a few years ago is that the European countries, all that are behind these countries to some effect, and that is consideration in all of this. Well, for better or worse, Greece has changed a lot since the whole economic crisis began to eat away at its economy 6 years ago. It's in many ways a different economy today.
The financial institutions are still standing, but this time 3 years ago, Greece was headed for financial collapse. The government's borrowing costs were at record levels. The country was drowning in debt. It took 2 bailouts totaling $305 billion, a partial economic default, and the promise of unlimited European Central Bank funding to prevent a domino effect of other indebted countries going under. Today, the outlook for Greece is much brighter.
I think there has been such a job made by the Greek authorities, such efforts made by the Greek people. So many things have been done, successful, although they have been painful, that they are bearing fruit now.
That economy that's growing again after 6 years of austerity measures that included wage freezes, all to save money. But Greece still has the highest unemployment rate in the Eurozone. And the rise of far-left and far-right parties has contributed to a sometimes violent political climate. Both the far-left and far threaten to negate or abandon the bailout altogether, triggering a new crisis. The prospect of those fringe parties gaining parliamentary influence adds to concerns from the country's outside financial backers about what kind of government may emerge from these elections.
The idea of contemplating the possibility not to reimburse a huge debt is suicidal. It's not possible. It would mean default. And that's what we try to avoid for years.
For now, Greece is turning its economy around, attracting international investment. The port of Athens has become the largest in Europe after China bought a 50% stake. The aim is to turn the city into one of the most important trading hubs in the world.